Alright, hello guys, glad to have you on board again. Today we are going to talk about Big Daddy Bitcoin. And well, the reason is that we have just terminated January of 2024. The month has been closing its candle, and therefore, well, we have some signals. And that means there's something we need to talk about. This is something I didn't really think we would close like that and that the signal will be there, but ends up that it is. And therefore, the signal being what it is, I'm going to have to change and adjust some of my scenarios regarding Big Daddy. I'm going to share it for just general knowledge, and also as well because I think it has some educational purpose content, which most of you guys may take advantage of. So that's really the way it goes. Once again, just as a quick introductory note here, this is not financial advice. What we do use in here is just a statistical study that is created by those indicators that have been perfecting over the years. There are more than 7 years in production now. And well, I've been using them to guide my strategic decisions on every asset which I put money into, and that certainly isn't built for cryptos or neither Bitcoin itself, nor Ethereum, nor any other altcoin or shitcoin or whatever. It's certainly not built anyway for any such thing as a specific stock or specific stock sector or indices or whatever. It's just meant to study random structures in series of data points. It's been, of course, tailored for market lectures, but it's certainly not a predictive algorithm. It just can't tell you what the future is going to be made out of. The only thing that it can do is just gather information on probabilities of forecasting scenarios. So that's the way to go. Remember, the price, no matter what, will do any fucking thing it wants. This thing just imposes some restrictions on the probabilities. And remember that a probability is just nothing more than what that is. Go out in the casino and just assess for a 50-50 probability. That doesn't necessarily mean that one of the other will actually end up being at play. You just can't predict the next move. It's really 50-50. And even if you had a 70-30 probability, for whatever reason there is, well, you would still not be able to predict the next move. So really that's essential for you to understand. The study that we make here in Bitcoin can't predict the next Bitcoin move. It's just that we use a statistical study that says, I don't care about Bitcoin, I don't care about anything you put into this algorithm. I'm going to pull out some information that shift the statistical probabilities to do this or that. Or if you want to do this, then this is the probability of you reaching out that target by that time scale. That's really the way to go, okay? It's a time-based dynamic price study stuff, okay? So now that this has been said, let's dive into the analysis itself. So of course, for those who know the strategy, you know what this means. That means, well, something is interesting. There are two things that really points out to me is that, first of all, we have a square breakout. Okay, so remember there are two types of breakouts, the cross breakout and square breakouts. The actual algorithms that pulls these things into motion is the same. It's just that once there is detection for a breakout, which just says the price is trying to accelerate. Basically, that's what it says. I'm not giving you all the credits for this. That means we're breaking cycles. That means the market is acting cyclically, and that reason now has changed. That means the cyclical behavior is altered. Well, that's one thing, okay? The prices are generally accelerating in one way or the other. We've broken cycle. That's what these patterns tells us. Now, the difference between the cross and the actual square signal is that the square signal passes through a second filtering algorithms that just try to figure out if the close proximate vicinity is just basically saying, do we have high probability of this to be a range boundary or not? So that's really important and critically important. When the algorithm says, yeah, I do have some decent probabilities to figure out that this is likely a range boundary, versus, yeah, I think chances are I don't know. So this thing can very well pass through. That's the reason why then you have breakout targets, which just tells us for this approximate duration, which is 30 bars, this is the time which I expect prices to cross above if there is a trend, or to stay close to or below if this is a range. So this range boundary in here just says there is more statistical probabilities for us to either stay below or across against the probabilities to go higher. and stay there. So in terms of value, because in here we're in a monthly chart, that tells us that by an approximate June 2026, so 2.5 years or so, it just tells us, well, this is what we have. The statistical probabilities to go new all-time highs and stay there are non-significant. They are less probable than the probability of either staying there until, for whatever reason, the target matures. We don't necessarily have to go all the way to the end of it, but that means we can still cross by the end of it. So let's say, I would say now, this information tells me one thing. If we want to sustainably move Bitcoin prices to new all-time highs and stay there, all right, we're going to have to wait until 2026. Yeah, that's something. Like I said, that doesn't mean it will happen that way. It just means, statistically speaking, this is what I consider most likely scenarios for now on, accounting for that new emergent signals. So that's really the way to go, okay? I think now if we want to sustainably move Bitcoin to a higher price, 2026, that would be consistent with scenarios that, for example, the halving maxes are already. So that means, well, we're getting to the halving in May of this year, and, well, we're very likely going to have to spend another year ranging before actually doing something. That means, well, we could not break to all-time highs durably before somewhat like late 2025 or 2026. That's a very likely possibility now. And therefore, what happens to me is that the probabilities for these guys' scenario to pull through have risen. That's all there is. That doesn't mean they won the game. Yeah, that's how it's going to play out. No, it just means this is likely because it's consistent with the statistical analysis that these indicators provided me. Okay? Now, that's one thing. Second option, because of course you might have seen that in the past, that sometimes we can cross through those targets, but that means we're going to get back there again. That means if we want to go above this threshold, we're probably going to pull back somewhere around this level by the end of it. That means if we cross over and make all-time highs in terms of Bitcoin, we're not necessarily going to last there. We're probably going to have to retrace back down to the somewhat 50-55K area. So that's another critically important information to me in terms of risk management. That means, well, if we make broken all-time highs despite the risk limitation signals saying, yeah, you might not want to do this, you might want to take your time if you want to do it durably. If you still want to do it speculatively or whatever, you're going to have to get back there again. That's all it says. You're going to have to get back there. Or the probabilities to get back there will be significant. So that's it, okay? And of course, third option is we stay below. That means, well, we don't even attempt to break this thing, or we attempt, but we don't succeed making new all-time highs, and we're going to have to range until we successfully do this. All right? So that's the way to go. We now have statistical probabilities that are much more significant for one of these three stuff. Of course, there are still many other probabilities to do wild stuff, but they are less significant than these three, because these three have generally played out in many of the other assets in which that scenario played out. The second thing we need to mention is the fact that you might have seen this square signal has been highlighted by the algorithm. It's been pulled a larger kind of gray square on top of, which is basically, for those who don't know, that means this is detected historical alert system for the detection algorithm. That means the detection algorithm is taking all the signals provided by the indicator and is trying to figure out those who have higher interest, the signals that have higher probabilities to push these signals into price reactions, okay? These are the interesting contexts. Like in here, it's saying, yeah, you have an interesting range context. Of course, that's not a magical algorithm all by itself. You need to fool it out with momentum studies to risk limit the probabilities of taking that trade. But despite that, you see that this was a very nice area in which, well, frankly speaking, by the close of that candle, well, it was really too late, but definitely those who were trading out there, remember that target, well, should have profit taken. That's really the way to go. Okay, so remember that when it comes to Bitcoin, we have this highlighted thing that says we're in a ranging context, and that's because we already had one. That means we had multiple breakouts in this vicinity that just gave us the first range boundary, the second one, and now possibly the third one. That means the range could be approaching late maturity. The first thing that we can take out of this is to say, well, we can definitely validate the previous two bottoms. Therefore, we can draw a trend line. So long as we stay above this trend line, of course, the trend still being bullish in here, remember moving averages outside the context and stuff like that, that means, well, probabilities for us to break this trend line to the downside are far less significant than it would be to break the potential resistance trend line that could emerge out of this. Remember, if we go for this type scenario, going for absolute nothingness until we late mature this breakout target, well, we're going to be able to break this trend line at a later stage. Breaking it would potentially be the signal that we go for these all-time highs durably this time around. All right? And we could stay below or trading across this trend line for quite some time until, of course, we break the lower one. If we break, remember, fake outs always occur, so if we just trade slightly below that trend line, don't be worried. That's not the end of the world. It just says, well, of course, if we durably break it and if we break the previous low points, I wouldn't like that. So if we do this and then this, frankly speaking, at 17K bearish breakout, I'll be very concerned about Bitcoin's future. Until then, like I said, this is a possibility, very less likely though, because this one is facing an opposite bullish trend. So bearish breakouts in a bullish trend, yeah, statistically speaking, you'd rather like to follow the bullish breakouts. That's just TLDR. Okay, so that's how it goes. This one is highlighted because that's the third breakout in a row. We have previous range boundaries highlighted and respected by the algorithm. So we very likely can assess that the likelihood for a range to build are higher rather than the opposite way around. So that's just reinforcing what we said earlier. That means this square signal all by itself would have told me that statistical probabilities have shifted, but the fact that the algorithm is highlighting it as a very valuable context on top of it is just making it even worse. So the probabilities are now very significant to me that, well, if we go higher, we're going to go back down later. So that's why I will adjust my risk profile out of these new informations. For those who know, I've always said I'm not selling my Bitcoin until I have significant reason to do so. So part of my Bitcoins are in a long-term investment. So this part of Bitcoins I'm not talking about now. That means for some of Bitcoin, I might be considering taking profit, because if we go higher and if we reach out to my potential targets, which have been highlighted by projections of the previous wave, which is somewhere around 120K, if we go out there, I will have the statistical significant probability to go back down to 50-ish or 60K-ish. That means 50% drawdown. That's the kind of drawdown I'm willing to risk manage. That means, well, I'll be willing to take somewhat like 10 to 15% profits just for the sake of buying it again and make a profit out of this. Am I going to short sell out of this? Certainly not. Remember, that's way too dangerous. Short selling means, well, if you just take a peek, you're going to lose some money. I don't want to lose money, but I will definitely put some money in here on a take profit pattern, pay the taxes, and buy it again later. Because frankly speaking, I think that would be the wisest thing to do. Okay? Of course, remember, for tax purposes, it doesn't really matter to study any type of arbitrage that goes beyond 20% or 30% drawdown. So that's the way to go. If we go all-time highs, but do it like in a shallow all-time highs, okay? Let's assess we have this a kind of trend line. If we put the parallel to this, that's just basically somewhat around 80K. If we do this, we make all-time highs, 80K, and then we go back trading at the target. I don't really want to arbitrage for 20-30% drawdown. Remember, you're going to have to pay taxes. That's not really necessarily the best type of arbitrage to make. Of course, if you're in areas in which taxes are non-existent, well, you can eventually forecast that thing to do, but that's not my case. So that's frankly the way to go. If this is what happened, I don't pay too much attention. I would be just waiting until we can successfully break out of there in late 2025 or early 2026. Okay, that's the way to go. If we go much higher to the point that we could risk a 50% drawdown, can be damn sure I'm going to blindly take 15% off the table, 10 to 15% off the table, depending on the signal. If I have no signal in here, there's going to be a minimum 10%. If there are some signals, potentially up to 15%, nothing more than that. There's another speculative area. God knows, speculation can be dumb. If we go to 200K, that's another 10 to 15% layer that's going to be taken off my investments. Same story, just to buy it back when we retrace down to the target. So you would say, Phil, though, what happens if we do not stop and if we go to the moon afterwards? Well, it's still probable. Like I said, I don't forecast the future. All I say is this is very unlikely, and therefore I will not take this into account. It can happen, and I will still have somewhat 60 or 70% of my Bitcoins, and that's it. I will take that risk. If it happens, yeah, no problems to me. Once again, like I said, I'm not considering short selling to hedge the portfolio for whatever reason. It's purely risk managing for probabilities of reversals to just buy again later at the same prices. What that thing tells me is that the probabilities for range, which means the value to successfully break out and stay there in the distance, is very narrow. Still possible, like I said, but narrow. Okay? The reason why I'm also mentioning this is because, well, Bitcoin is solo on this one. Ethereum didn't nearly trigger such a signal for now. Okay? So that's really critically important to me. Okay? Sorry, let me just hide the drawings. That's going to give us a better state. Okay? So as you can see in here, no breakout targets for now for Ethereum. Could very well happen. Like I said, I think Ethereum is going to start its breakout sooner or later. It's just, well, a matter of time. And I'm not predicting that's going to happen this month or next month. It's just, well, I think it's going to come. Bitcoin has done, and I think the likelihood for Ethereum to follow suit is significant. The difference here is that Ethereum has already been highlighted, but as you can see, the range boundary has already been triggered at the bottom, which means in here, the statistical difference for this pattern isn't the same, which means what we have in here is a very low probability for this boundary in here to pull out a square pattern. Though you guys don't really know what I put it in the indicator, but let me tell you, the probability in here to get a square signal is much, much lower because two of them have already played out. That means we already have the range boundary in here. The range is already mature when it comes to Ethereum. So I think probabilities to break out of this range are significant. And like I've always said before, the range is resistances to supports. So that's Ethereum range. Though we'll see what that means. But like I said, if we go higher and if there is a square signal pattern that shows out of this, despite what I just said, it's still possible. If it does, then that means my targets for Ethereum will not outpace anything but $7,000 and pretty much the same thing as Bitcoin. That means whenever we go there, I'll profit take my Ethereum just to retrace afterwards out of this same target area. Okay? Now, if Ethereum pulls out a square, a cross signal and not a square, which is very likely, that means we're going to go and potentially break out of this range. Okay? So remember the difference between the two. When you have a cross, that means you can break through this level and stay. When you have a square, that means you can break if you want to, but you're going to get back there. But most of the time, as you've seen before, those square signals tend to build range boundaries. Signal, boom, range boundary. Okay, so that's really the way to go. So I have clear evidence now, backed by statistics. Remember, I've shared my sentiment on the market multiple times, saying I think Bitcoin has matured. Bitcoin is in a long, long game. All of those fancy million targets whatsoever are just fancy stuff for the future. In a more foreseeable future, late 2025 to 2026, I think the probability is to have nothing happening for Bitcoin or just a shallow market top that will rapidly retrace to somewhat nearby prices as we do have now, or slightly higher, 50 to 60K, where the target is, okay? Well, the significance, the probabilities to retrace out there later stage are very much in the charts now for me. And I very likely trust more what I see than what I think. So despite the fact that it confirmed what I thought previously, now it's on the charts. And I'm going to trade according to this. When it comes to Ethereum, I'm very curious to figure out what's next to come. It can very well follow suit with Bitcoin and do nothing until it breaks. But what that tells me is if for whatever reason Ethereum starts to break and doesn't pull out the same signal as Bitcoin, there's one thing I've been advocating for quite some time, saying I think Ethereum and Bitcoin are not the same types of beasts, that Ethereum might follow suit with a breakout, which Bitcoin can eventually try to follow, but very less likely will be able to hold in the future because Ethereum might have a technological breakthrough, Bitcoin doesn't. Bitcoin is just Bitcoin. It does what it does. It's just the inverse correlation to dollar printing. That's really the way to go. So like I said, I think this reinforces the probability in which Ethereum and Bitcoin might have different contexts. And if that happens, that could be the technical justification for what I've always pleaded as my personal thinking in the market, that Ethereum is on the verge to outpace Bitcoin and significantly. And if that happens, that means Bitcoin can follow, but it will have to pull back at the stage. That Ethereum can outperform significantly and stay there. So that tells me one thing about the dominance, because like we stated, we've talked about dominance for a while as well. And it's just been like, I'm sorry to say it, but the Bitcoin dominance has given some bearish signals. And frankly speaking, I think, well, the probability to have a dominance falling right back down now to new lows is just being reinforced by what is just seen here. That doesn't mean this is a guaranteed battle, because Ethereum hasn't played its game yet. But when it does, and if it does, I'm very curious to see what type of signal is going to come out of this. If that's the type of signal that ends up being a cross breakout, the probabilities for this to be the emergence of the beginning of the trend for Ethereum, where Bitcoin is just going to create yet another new all-time highs, cycle breakout stuff, just to create another 50% pullback afterwards. Like I said, I think this is a significant probability. That doesn't mean Bitcoin is going lower anytime soon either. Bitcoin still have a multi-year long secular bull trend, so there is no fear for Bitcoin. I don't fear Bitcoin in the long run. I'm not switching gears and selling it all to get only Ethereum. I'm just saying, once again, that's one of the reasons why I overperform Ethereum against Bitcoin in my portfolio. I think more returns can come out of this asset. Not in a 30-year time frame. Ethereum might overperform in the forthcoming cycles. That doesn't mean Ethereum will be the leader forever. I think Bitcoin can catch up at some later stages. But that's the reason why I wanted to share it all, okay? It's just that I don't mean to trade what I think. I trade always what I see. But here, what I see is starting to confirm what I thought. That means, more than ever, I'm going to apply that strategy. I've also altered my Bitcoin strategy now, according to what I just said. I don't know what the market will do, but I know how I will react to this, no matter what it does. If we decide to go to somewhat like 110K and above, I will lock on some partial profit taking. Moreover, if we head to a 200K area, which I will do a second layer of profit taking mandatory, that would cause, technically speaking to me, the probability of a 50% drawdown, or if we eventually go to the second area, up to a 70% drawdown afterwards. That doesn't mean the breakout, the pullback will happen. That just means I need to get ready for it. And the only way I will get ready for this is to lock on some profit to, of course, buy later. That's just take profit to buy again with the same money, of course, tax being paid in the meantime. That's really the way to go. I hope it's clear for everyone. If it isn't, of course, just reach out to me in Discord and I'll be happy to explain in greater detail. That being said, I see you guys later. Bye-bye.